Fade off the bottom, that's a win. Fade off the top, that's a win. Fade off the bottom, that's a win. Fade off the top, that's a win. Range fade, people. If you are a beginning trader and you're looking for a very simple strategy, the range fade strategy is where you need to start. The range fade is very easy to find. It's very easy to trade. It has few rules and it's really hard to shoot yourself in the foot. If you really want to get started with a very, very simple but solid trading strategy, learn more about the range fade in this video right here. Let's go deeper. Hey guys, how's it going? JD here. So check it out. I got my Sanders jersey on today. So let me coach you up. All right, check this out. Range fades. Listen, if you are a new trader, if you are a beginner, range fades is going to be the best and simplest strategy you can start with. And there are so many benefits. Okay, so that's where we're going to start. We're going to start with the benefits, and then I'm going to go into the rules and maybe even do a few examples. But the benefits, let's start with the benefits. First of all, what people really don't know, because you're new, right, is that the market really ranges 80% of the time. It only trends 20% of the time, okay? So if you're new to trading, the market can only do three things: go up, go down, or range. That's it. The market only does three things. And what most traders don't realize is that we're in the range 80% of the time, okay? So if we're in the range 80% of the time, it's good wisdom to learn how to trade while you're in the range, because you're going to be in that range 80% of the time. You're only catching a trend 20% of the time, okay? So that's number one. You know, you're in the range a lot, so there's a lot of opportunity if you know how to trade the range. All right, so that's one benefit, that the market is always, you know, ranging. Now, the other benefit is that when you start to trade ranges, you really start to see price action. You see like all the facets of price action. But let me just get to another major benefit. A major benefit of trading a range is actually when the range is over. And so we're in a range, right? So now out of those three things, only two can happen. Either we're gonna break out and go up, or we're gonna break out and go down. And so once the breakout happens, now you know which way the market is going, right? So now you can trade the trend. So if you had been in a range and then it broke out and went up, now you know to take all buys, take all longs. If it breaks short, now you know to take all short. So after the range, then you know which way the market is headed. That's another benefit of range trading. Now, while I'm talking about breakouts, let me say this. This is why. Breakouts is part of bad common trading knowledge. All right. The industry wants you to take breakout trades. If you're new or beginner, you've probably already come across a breakout strategy. Those are losing strategies. The reason is because typically most breakouts fail. Okay. Again, we're ranging 80% of the time. So every time we go to the top, people who take breakout trades are thinking, oh, it's going to break out this time, let me go long. Experienced traders who are trading the range, who are fading ranges, always know that, yep, everybody's about to get trapped and we're going to go short again. I'm going to fade the top. When I get to the top, I fade it. When I get to the bottom, I fade it. And so everybody who's taking the breakout strategy gets trapped, and then prices go against them. And everybody who took range fades make easy money, okay? And let me tell you why this is happening. It's basically happening because when you're in a range, what's really happening is this. So let's say we start at the bottom, all right? And the bottom is demand. And so when you get to the bottom, there's a whole bunch of buyers down there. It's a whole bunch of buyers down there saying, nah, it's a whole bunch of us down here, right? So those buyers take control and you push up. But then when you get to the top of a range, there's a whole bunch of sellers up there saying, nah. That's enough of this buying stuff. This is where the buck stops here, right? And then all of those sellers, there's so many of them, it's like 3 times more sellers in this one spot. When prices get there, it's 3-4 times more sellers here. Then they take over and say, nah, buyers, end of the road. We think the price should go back down. All those sellers overtake the buyers, then you head back down. That just keeps happening. That just keeps happening. Buyers in control, sellers in control. Buyers in control, sellers in control. But nobody is taking over to the point where, you know, prices can keep going until the breakout happens, right? But you do not know. Here's the catch. You do not know how many times the fade is gonna work. You just don't, you know? I mean, just because the market hit the top 3 times don't mean the next time it's gonna be a breakout. You know what I'm saying? So people who tell you after 3 touches, the breakout's gonna happen. Nobody knows. Nobody knows, because you don't know how many sell orders are still sitting there, right? You don't know how many people are gonna take their profits when they get to the top because they're fading the range. And then once they bought to get in, right? Once they sell at the top, that just adds more sell pressure to all the sellers who's sitting up here to go back down. If you're new, you may not understand everything I'm saying here, but just trust me when I say, don't take breakout trades, all right? You want to fade the range. And that's exactly why the range is so powerful, because you can, you know, you're doing the opposite of what everybody else is doing. You're doing the opposite of the 90% who's losing, okay? You don't take breakout trades, you fade the range. And if you do take a breakout trade, you take what's called a breakout pullback entry, where you wait for prices to clearly break out the range, come back and test one more time. Then once we're headed out, you take that. All right, so that's how you take that. Now, the other benefit of a range is that it offers the best risk to reward ratio. Okay, so how does that work? Simple. And this is the best risk to reward ratio in any market. Let's say you're in the Forex, right? And we get to the bottom. Well, hey, you make it risk 10, 20 pips. You know what I'm saying? So this is the bottom. You put your 10, 20 pips right here, but the range may be this big. You see what I mean? So you may be only risking 10 or 20 pips to try to make 100 pips. Same thing in futures. You know, you got a range. You may only have to risk 3-4 points to try to make 20 points. It all depends on how big the range is. So it offers a great risk to reward ratio. You know what I mean? So that's the other benefit, you know what I'm saying, of the range. Not only is it a high probability trade, it has a great risk to reward ratio. Okay. So let me think of another benefit. Another benefit of the range is that, to me, they're easy to find. You just slap a 21 EMA on it, and if it's moving like a roller coaster, you got a range. Okay. Now the thing about it is this: when you're at the bottom, one thing about the 21 EMA is that when prices are far away from the 21 EMA, it's going to act as a magnet. Okay. So this is why range fades are powerful, because when you take that entry down here and the EMA is up here, the EMA is going to act as a magnet. So prices got to pull back to it. It's a moving average. So prices have to come back to the 21 EMA. All right. So when you're looking at taking a range fade and you're a mile away from the EMA, that's just another sign that this is a good setup. Okay. So I'm trying to tell you, range fades are great. They're highly overlooked. All right. And this is because of all the bad common trader knowledge that's in the industry, right? The bad common trader knowledge is going to tell you to wait for a breakout, to look for breakouts, to have some type of breakout strategy. Don't do it. Don't do it. What you want to do is find ranges, okay? And that's another thing. It's so simple. We'll do some examples, because it's so simple to find them. If you use the 21 EMA and it looks like a roller coaster, the market is in a range. Then you just box it up, which we'll show some examples, and I'll show you how to box it up. You box it up, and then boom, when prices get to the top, you sell. When prices get to the bottom, you buy. I actually just covered the rules. That's kind of the rule of trade. So let's get to the rules, right? The rules are very simple. All right. Once you have the range boxed up, when you get to the bottom, and you get a touch and you get a good rejection signal candle going back in your direction, you buy. When you get to the top and you see some rejection and you get a good signal candle coming down, you sell. The rules can't, okay, there's only one other rule. If you're in the middle of the range, you do nothing. You sit on your hands, right? Those are the rules. It doesn't get any easier than that. When you're at the bottom, you buy. When you're at the top, you sell. And when you're in the middle, do nothing. Those are the rules of the range fade setup. It doesn't get any simpler than that, right? Now that is simple. You want simple, that's simple. You want a simple trading strategy, learn how to trade in the range. Again, it's going to be happening 80% of the time. Most people are trying to take breakouts, so that gives you great opportunity to take advantage of the losers. Just putting it out there. That's just how it is. And so everybody else who has the bad common trader knowledge, again, is going to be trying to take breakouts. You can take advantage of that. You can fade the range, and you will see. So I'm gonna go to some charts here, and you're gonna see how I find a range very easily. It's not in there, easy to find, and you'll see how often it bounces, because nobody knows when the breakout is going to happen. All right, so your best bet is when you find a range to fade that range. All right, so this is a great time to like, share, and subscribe. We're definitely gonna go to some charts so I can show you some live examples. And hey, this is not pre-recorded. I'm just gonna jump right on a chart. We're gonna look at some binary option markets because we can find them so quickly in that market. And watch how easily I find a range, box it up, and show you all the wins. All right, so let's get to it. Let's go to the charts. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. All right, guys, we are on the charts. Let's see if we can find some ranges here. Let's run over the currencies. Start at the top, see what I could do. Okay, that's a trend. And that's a trend. And this is why I love the 21 EMA. You can so easily see what's going on. Okay, that's a, see, we had a range right here. Wasn't a great one, but that was a little range. Looking for a bigger one. So we can, oh, here we go. Here we go. This Cash Swiss was ranging. Now, when you're talking ranges, you really want to put, when you find the top of the range, I do bodies. I don't do stems. Reason why is I want to see the rejection. So I want to see the rejection that happened. So I do bodies for the top. This one is actually kind of choppy. I'm gonna find something. I may come back to this. This one's kind of choppy. Let's see if we can find a better one. Ooh, look at that sweet spot call I made earlier today. Ooh, look at that. So everybody who's in my swing trading Titans community who saw this markup, yeah, that was a win. Great markup. Great markup, Jay. All right, let's see. This was almost a good one. That actually might develop into a good one. But this is kind of one that's starting, and this would be good to show you because it's just kind of getting started. So what I would look for is, here's a body. All right, look what we're doing. Failed breakout, coming back in right now. All right, so that's the top. And here's the bottom right here. So this is 1 touch, 2 touch, 3 touches. This is making 4 touches. All right. So this is a range. Now look at the EMA. EMA looks like a roller coaster. Okay. So you get your stop above here. Again, if your stop is like right here, this price is 163, right? And your target is down here at, well, 162, but 247. Let's say 247. 247, 32, 24/7, and then 27. Never mind. It's binary options. It's hard to tell the price, but you guys see what I mean, right? Short distance, long distance down. You get what I'm trying to say, right? So if your target is way down here, that's a pretty good risk to reward ratio, right? Just look at this fade. I mean, when you entered here and caught this move all the way down, and your stop would have been above here, that's a great risk to reward ratio. And then when you put your stop below this one, look at this beautiful sign. See this failed breakout. Everybody who took the breakout got trapped. Look at this beautiful strong candle back in, closed on this top. You put your stop right here. Look at that, boom, all the way up. That's a beauty, right? So range fade. And now, was that hard for me to find? No. I looked for 21 EMA, looked like a roller coaster. Put it at the top, put one bar at the top body, one bar at the bottom of the body. We got a range. All right, let's go find another one. And you see the risk to reward, and man, that was lovely. Great risk to reward ratios on those. Tell you, range fades are overlooked. They are overlooked in the marketplace. Okay, let me just show you this one. Show you a past one. I will hit this body. Oh, here, this is the first, this was the high, and then it was bouncing from there. Then I would look for a low, which was this body here. We bounced from there. All right. So EMA, notice roller coaster, right? So let's say you saw this top, this bottom, and this top. So at this point, you can draw the range, right? Then when you came down here, you're looking to fade it. You put your stop down here, take this signal candle, boom. That's a good win up to the top. Then now that we top, we're looking to fade it. All right, so you get this, go here, your stop is up here, boom, you get this one. It came up short right here. Now this really scared you. Probably should have moved to break even or something at this case point. Then boom, broke out like a mug. But look, you think we're gonna keep going. Nope, this was a failed breakout. This is why you wait for the breakout pullback, which doesn't happen. Because when it came back, it just kept coming back. All right, so that's why you don't take breakout strategies. This breakout strategy would have worked for a hot second, and then it would have came right back again. So you just never know. Never know. Let me find one more though. You never know when the real breakout is gonna happen. So when you're looking for range fades, just keep on fading that boy. Let's check on our euro yen, see what's happening. Yep. Man, this is a high, lower high. Oh, you definitely in the game now. Now we're under the EMA. Psh, winner, chicken dinner. Winner, chicken dinner. This the bottom on the body, not the stem. And the top, I would say, would have been here. So you got this top, this bottom. When you get this touch up here, you should be able to draw this range. Coming off the top, hit this one right here, put your stop up here, boom, home run. Look at the breakout. Everybody who took the breakout strategy failed. Once we come back in, you put your stop right here, all the way to the top, boom, winner. Look at this one, breakout. Everybody who took the breakout got trapped. You put your stop up here, because we're gonna fade the range like you should. Take this entry right here, boom, home run. Man, I can't make this stuff up. Now, here we go. Now, this is how you properly trade a breakout. We broke out. You don't take none of this. You sit on your hands. You wait for the pullback. We get the pullback. Now we can't get back in the range. Try it once. Try it twice. Try it 3 times. I'm going short. Now you're trading with trend. Now you take trend trades all the way down. That's how you properly trade a breakout of a range. So there we go. Now I'm happy. Now I feel like I've taught you guys something. Now you've seen it all. You see how you fade the ranges. You never know when it's going to break out, but when it does, boom. And see, everybody who went here, you know, they just knew that this was it. They knew that this one was the breakout. No, they got trapped, right? And everybody who thought long, they just knew this huge candle here was the breakout. No, they got trapped. You fade the range. You never know. Now, even if you, and look when you get down here, you ain't get no single candle. So you don't get trapped here. Going long, there's no reason to go long. You don't go long on this, too much stem, didn't get back into the range. You don't go long right here, all right? So if I was trading this, remember we drew it off of this high and this low. After this touch, it was go time, right? So this is 1 win, 2 wins, 3 wins. We don't even get nothing back because we don't get trapped. And then we wait for the breakout pullback right here. 4 wins. We trade this. We trade this right here. We don't take no losses. We don't take no losses. The rules are simple. When you get to the bottom, you buy. When you get to the top, you sell. When you get to the bottom, you buy. When you get to the top, you sell. If it breaks out, you wait for a breakout pullback entry to start going with trend. All right. There you have it, people. This is the simplest trading strategy that any beginner can implement real fast. You use the 21 EMA, and remember the other rule: if we're in the center, you do nothing. Because I mean, it's gonna be tempting to take some of these setups, because as you learn price action, you'll see like this was a low, higher low that would have worked. You know, this was a high, you know, lower high that would have worked. And this is exactly why trading the range is great, because as you're sitting on your hands waiting for it to get to the top or bottom, you will learn price action. You will learn how the market moves. You will be able to see this rally, base rally, you know, this drop, base drop. As you just sit here and wait to take trades off the bottom or the top, you will see all the other price action entries that happen in the market. And this is going to help you. So not only this is another benefit that I didn't mention. Not only is this a great strategy for a beginner to start with, to start to win, it helps you learn how to trade overall, because you'll start to see the other setups. Here's a high, push down, lower high, boom, that's a win. Here's another high, push down, lower high off the EMA, boom, that's a win. Here's a first push up, first entry, push up, second entry short off the EMA, boom, that's a win. So see, now the thing is though, you're taking range phase though. You're not trying to take those setups, but once you break out and you're in a trend, now you want to take those from this bottom up here. Push up, first entry, push up, second entry short, huge rejection signal candle. You take that second entry short, that's a win. Then you got a high, lower high, boom, that's a win. Then you got another high. Well, no, this one broke higher. And then this one just fell through the floor. Then you got a high, push down, lower high right here. Beautiful signal candle. You take that one, boom, falls through the floor. So by studying the range, by starting with trading the range phase strategy, it will allow you to see all the other price action strategies that happen, but your focus is just learning how to trade the range, just focusing on the range. But while you're focusing on that and just watching prices print to a price chart, you will start to see how the market moves. You'll start to see the rule of two. You'll start to see the market cycle. You'll start to see second entry longs, second entry shorts, higher lows, lower highs, rally base rallies, drop base drops. You'll see all the setups that happen while you're focused on just taking range phase. And it's going to make you a better trader in the long run, right? So if you're a beginner and you need a simple strategy, or if you've been struggling, go back to range fade. Just find the range fades. Look for an EMA that looks like a roller coaster. You know, after you get 1, 2, 3 touches, it's go time. You're in a range. And then from there, simple rules. When you get to the top, you sell. When you get to the bottom, you buy. And hey, That risk to reward ratio in Forex and futures is wonderful. In binary options, you're gonna have to pick. You're gonna have to say, you know, I would say anything over 3 minutes would be good. Do 3 minutes, do 5 minutes, do 10 minutes. All of those have you in good shape. Hey, let's look at that euro yen before we go. Oh, came back on us. But if you had did binary options, if you did 3 minutes, you would have won. If you did 5 minutes, you would have won. What about 10? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes, you would have won. You would have already won in binary options market. In the futures and Forex, you probably would have. Futures, you definitely should have locked in or took some money. Forex, you still be in a little, it depends on whether you move to break even. But this thing definitely ran down. But once it came back above the EMA, I would have been moving to break even. This still would have been a win. It just wasn't a home run. But hey, that happens. But it ain't over yet. It ain't over yet. Anything can happen on that. But that's the lesson for today. I hope this really helps you. You know, range fades, they're a thing. They're a thing. And if you're new to trading, you know, the range fade is a great starting point. Great starting point. I mean, this is everything right here. But remember, do not use bad common trading knowledge. Do not go with the majority who tell you to take breakout trades, breakout strategies. Don't do it. If you break out of a range, you wait for a pullback and you take something beautiful like this to go with trend, but you don't enter in this row. Just like entering in this row would have got you, entering down here going short would have got you, entering right here short would have got you, entering right here short would have got you. Don't do it. Same thing would have happened on the loans. Don't go here, don't go here, don't go here. Fade the range. All right, this is a great time to like, share, and subscribe. Hey, if you was digging this one, hit me in the comments, please. All right, keep them comments coming. Let's keep the channel growing. Let's find other people to help increase on the sudden. All right, my name is JD, and I'll catch you next time. Bye-bye. If you want to learn more price action trading, watch this video right here. My name is JD, and as always, I wish you increase on the sudden. Bye-bye.